Hello, folks. Today we are going to talk about a feature in Opstra. It's called Options OI Buildup or Open Interest Buildup. Okay. So if you go to Open Interest page and then you go to OI Buildup, you will see this Options OI Buildup for that particular ticker and expiry. Now, many people have asked how to interpret this particular feature. Now, I'm going to explain in this video how to interpret this and how you can use this in your trading. Before we can go into this explanation, you need to understand four things, which is long build-up, short covering, short build-up, long unwinding. What are they? Not all of you might know these things. So let's go and see what exactly they mean. So when we say long build-up, it means in that particular option or futures, the open interest increases with increase in price. Okay. If somebody is bullish or bullish on something, then he will go and rush. He'll go in rush and buy the call options. So when he does that, the open interest of that call options increase. And because there's a huge demand from him, there's also increase in price. So it's a demand supply, dynamics. So when we then then we'll say this build up as long build up. That is price rises along with open interest. And when the open interest decreases with a decrease in price, then we call it as long unwinding. So let's say somebody has huge positions. Let's say he has a lot of call positions, long call positions, and suddenly the market is going down. So what those persons will do who has long call positions, they will want to quickly exit their positions. So in order to cap their losses, so they'll quickly try to exit their positions, long positions. So they have to sell no at whatever price possible, right? So suddenly there is a selling pressure because of that. So when you're long unwinding, both the open interest decreases as well as the price of the option decreases. So that's what we call as a long unwinding. Now let's come to short buildup. It is when the open interest increases but the option price decreases. So let's say I am bullish or option sellers are bullish. If they are bullish for an option seller, the option is only to sell put options, right? So that they can get the premium if the market goes up, because the premiums of the put options decrease if the market goes up. So that's why they'll sell these put options. So they're building up these short positions in the put options. So there's an increase in open interest. But when they're building up these positions, right, there's a pressure created in selling, and as a result of that, there's a decrease in price. So if there is increase in open interest accompanied by decrease in option price, then we call it as short buildup. Now let's come to short covering. Now this happens when if they are in some kind of short positions. For example, let's say they have built up short positions in the put options, but then market suddenly fell down. Then what happens? Then they have to cover their short positions, short put positions, if they have to cap their losses. So they immediately want to get out of those positions. So if they are exiting their positions, there's a decrease in open interest, but there is an increase in option price because they are in a rush to reduce their open interest position. So because they have to buy it back, right? The put option. So there's a huge demand on the buy side. As a result of that, there's an increase in option price. So that is what happens in short covering. Okay. So the long unwinding is done by people who have built up long positions, and the short covering is done by people who have built short positions. Now, these different terms have different meaning for put options and have a different meaning for call options. Exactly opposite meanings. So please keep in mind these four terms because that's what we are going to discuss. Now coming back to these options, open interest build up. Now here we have put options on the top side and call options on the bottom side. And for each strike, you have this bar representing that particular option for that particular strike price. Okay. Now it's very simple. Here what we are showing is that options OI build up in that particular option chain for that particular underlying of that particular expiry. This particular picture or this chart gives a quick look at what is happening in the market, in the options market for that particular underlying. Now, when there is a long build-ups in call options, which means it's bullish, right? And when there is a long unwinding, then it is bearish for the call options. When there is a short build-up in call options or the long unwinding of call options, then the market is bearish from option seller's point of view. So remember that this option OI buildup has to be seen from the option seller's perspective and not from the options buyer's perspective all the time. So now the same way, if there is a buildup of options, short buildup of the put options, then it means that they are bullish, the short the option sellers, and the long unwinding means that they are bullish, right here on the put option side. If the call options are green, which means it has both long buildup as well as short covering, then it is bullish. If it is green on the put option side, then it is bearish, and if it is red, then it is bullish. Okay, so red on the top side and green on the bottom side, on the call option side, which means bullish, and the other way around, green on the top side and red on the bottom side, then it is bearish. So now exactly what is happening in the Nifty based on this particular option OI buildup. So now the current price is around 17,300 at the money price. Now if you come to at the money price here, right, 17,300, the call option and put option, there is both short buildup. Okay, so they're kind of, there is a fight going on between both, put option sellers as well as call option sellers. But below that, there's a buildup of put options here, which means the option sellers who have sold those put options are confident that the market is not going to fall, and therefore their put options are protected, or they are protecting their put options by taking long positions in the market, or somehow controlling the market and keeping it bullish, or not let it fall down. So that's the interpretation from the perspective of option sellers. Now again, if you look at the call options, now here there is a long build-up and some short covering, the light green ones, which means that they are exiting their short positions, right, when there is a short covering. So that is bullish, and they're building up their long positions in call options, even that is bullish. So they're bullish up to this point of time, up to 70,300, and above that maybe not so much. So one might interpret that either market is going to stay here somewhere around 17,200 and 300, or it will slightly go up. So that's the interpretation from the options OA buildup perspective. Okay, now if we go to the 3rd February expiry, now this weekly options will be the one which have lot of activity because of the budget session on the 1st February, right? There's a budget session, so this weekly options will have huge activity. Now so far the buildup indicates that now they have been bullish up to 17,950, right? So they have build up long positions, and they have short covered their short positions, right? So overall this is bullish on the call side, and at the same time they're bearish, up to 17,300 or so. Okay, right up till here. So you can say that they're mildly bullish, not totally, but mildly bullish. But it's definitely not bearish. If you look at this particular OI buildup, this is definitely not bearish. So that's how you have to interpret this particular chart. So green on the bottom, red on the top, bullish, mildly bullish. If it's half, for example, here it's up till here is green and then it's red, which means it is bullish up to here, but this is not supported here at this point, in these regions. So that's something we have to look at. So if there's a short build-up here as well, then you'll be more confident. There's only long unwinding, which is still, kind of bullish, but having the short build-up up to here, it will make it much more bullish. So right now the interpretation is that it is slightly bullish for 3rd February expiry, but it's not the same for 27 Jan expiry. It's only bullish up to here. So that's how you have to interpret the open interest. Now what is happening in the bank nifty? We remember that the bank nifty has overperformed Nifty by a lot on 25th of January, this Tuesday. Now you see huge short covering in options open interest, which means the option sellers who have been short at these strike prices, which is above, right? We were around 36,400 or so, and then they short covered all their call positions, right? Decrease in open interest accompanied by increase in call option price. That is short covering, because if they don't short cover, then they will be in loss, because there's a bullish price action in bank nifty. So this indicates that the bank nifty has been very bullish, and it also accompanied by huge short buildups on put option side, right? So red, green. So you are bullish up to 38,400. So that's how you have to interpret this particular options OI buildup. And if I look at 3rd February, it's even massive. There is no scope of any bearishness here, right? Total long positions in calls, and maybe these are not huge. We have to just check. Okay, there are decent built up in call options. If you look here, right? This Bank Nifty is very bullish at this for the 3rd February expiry. Now, just by looking this chart, you can simply say that whether how what kind of behavior the underlying has. So if you have some system, some trend following system, for example, then this can be very good way of confirming whether you are on right side of the market or not. So if you have a long position following a trend following system, and if you look at this OI build up, then you will be confident that okay, you are on the right side of your long position. That probabilistically speaking, that this looks good. Of course, we don't know what will happen, what will Fed decide and what will happen on Thursday. But we can only go on based on data, right? What is the data available? And the data available is saying that, at least based on open interest, that this is bullish at this point of time. That's all we can say. Now, what will happen? Now, these are event based. Now, what Fed will decide is an event based market, right? So that we cannot predict. The market can go down or the market can go up. We don't know. That will something we have to see on Thursday. So come back on Thursday, which is on 27th of January, and check what is happening to this open interest buildup. You will quickly see what is happening there. Whether this will quickly change into red by if the market is falling, and this quickly turning into green, light green or green. So those things we have to check what will happen there. Now, if you look at some sectors during last 1 week or so, the tech sector has been in kind of bearish grip, where their stocks have been underperforming even the Nifty, right? So if you go back and check what is happening to those stocks, let's say Infosys, right? What is happening there? So just by looking at that this is kind of bearish. Here it is green short covering, because short covering here it means that the option sellers who have build up their shorts are covering their positions because it is bearish. If they don't cover their positions, they will be in loss. So that is why they're short covering their positions, and therefore it is in green color. Now on the put option side, they are unwinding their longs. Like if you have a long build up there, somebody is expecting that Infosys is going to go up, and they have a long positions. And if the Nifty is going down, you have to exit those positions, right? Long positions. So you have to unwind those long positions. So that's why you see this long unwinding. And you also see some short buildups here, around 1720 at the money, and slightly above the at the money. Even here also you see long unwinding and short buildup, which means overall the Infosys is not oozing bullishness or even some kind of bottom here. So you have to wait for this to turn around. If you are going to go long, you have to wait this to turn around. Then only you can go long in your Infosys. So you can use any system and look at that what is happening in that system, either in the form of technical analysis, or either candlestick, or PNF analysis, or Renko analysis. It is giving some kind of, let's say Infosys is giving buy signal, or it is forming some kind of bottom. Now you come back and check here what is happening in options or buildup, and you are seeing that it's not giving you confidence. So maybe then you might have to wait for some more time for that to develop in the side of the longs, to go on the long side. So for example, uh, in that case, there should be some short buildup in the put options, and there should be some short covering on the long buildup, or the a short covering on the call option side. Then you will be confident that okay, that there might be a chance that Infosys might go up. So this increases your odds if you combine with another system than individually going with one system alone. So you develop the confidence by combining those two systems. And what if they are in sync or not. If they're not in sync, then maybe you have to be careful. For example, I remember uh, Akash on Twitter, he posted this particular chart for Bajaj Finance. The results were amazing. Okay, I mean the results I think came after the market. The results were amazing, but if you had looked on that particular day, the market was indicating bearishness. So it was pretty much something like this on that day. And what happened after the market has opened? Well, after the result has announced and market has opened, the Bajaj Finance stock has fallen down. So that's why you have to be careful and see what is happening in the options market as well, right? So if both are in sync, then it's good. Then you're in the correct direction, right direction. But if they're not in sync, then either you reduce your positions or be very careful. Okay, and let the system, let the options open interest build up develop and see which side it is going, and then only take position. Let's even now let's look what is happening in Bajaj Finance. Right, still kind of sideways, no clear signal here. But on that particular day, there was that bearishness. Now let's take a look at another tech stock, which is Techem. And again, here itself, you can see it's not looking good, right? And if you go back and look at the price action of these stocks, if you look at the Tech Mahindra, right, the price action is not good. So though here it is slightly kind of green candle, but this open interest is still not giving any confidence. So if you're thinking of going long here, because it took support somewhere here, or there was some support here, something like that, then I would suggest that wait, let the open interest build up develop, and if you get another buy signal, then go there, then go with long position in Techem. So both have to be in sync for you to take take that plunge into that particular position. So right now they are not in sync. So I would not either go long or short here. Okay, because here it's now, I mean, technically speaking, still in bearish position, but it has given a green candle. So you can wait and see what will happen when the market opens, and see if both price action and your option OI buildup is in sync. And the same way, I forgot to show the Infosys. And if you look at the price action, and it's the same, right? It's still not confident for you to go long here, because both are not in sync. Okay, so that's what I would suggest, that to look at these two, price action as well as or signal that you might get from your system, and see if that signal is in sync with this options OI buildup. If you combine both, then your probability of success will be much higher than just going by one signal. Now, similarly, during this bearish kind of market, uh, in this downward rally, there is a sector which has done very well, which has overperformed the market. What that was auto sector. Now, if you look at Maruti, right? Maruti has done well, and you look at the open interest build up suddenly, and it is bullish. You don't have to look anything else, right? Okay, there is short covering and there is a short build up on short covering in the call option side and short build up on the put option side. Now you will be confident here that it's kind of bullish. But what is price action is saying? Now let's go to price action. Now price action is bullish, right? So if you saw this chart somewhere here around January 19 or 20, and if you saw this, and if they both were in sync, then you would have gone long using your system in sync with this. So that's how you have to look at this open interest buildup. And if you look at another auto stock like Hero Motoko, here also again same short covering in the call options and the long unwinding and the short buildup in put options. Again bullish. What is price action saying? Same bullish price action. Now see you can how both are in kind of sync. So you will be confident here to go long in Hiro Motoko. If the same kind of scenario will exist on the Thursday, maybe you can check also the next week, the next month expiry. Here also it indicates the same, right? It's bullish, long build up and short covering in call options. Okay, so that's how you have to interpret options OI build up. Now, if you look at one of the stock which has rallied a lot, for example, Axis Bank, you know, one of the leading banks which caused a rally in the bank Nifty. Now, look here what happened. Short covering in the call options and short build up in the put options. Bullish. And price action, we already know it's bullish, right? There's a huge bullish price action on 25th January. And then if you look at another stock, Z Limited, right? Here it's a bullish price action on Tuesday on 25th January. And what has happened to, we look 288 here, somewhere here. Now you see at the money, there's a short build up and also a short covering here. So both were in sync. Then it's no problem in going long. So that's how you have to decide both are in sync or not. If they're both are not sync, your price action or the signal that you got from your system and the options OI build up, then you have to be careful uh, in going in that particular direction. Could be short or it could be long or it could be bearish position or it could be bullish position. It could be anything. So always try to confirm with open interest buildup as well. Options open interest buildup. So this is how you have to interpret. And look, you can simply by looking this chart, you can very fast say what is happening in the market. Again, another tech stock Wipro. It's kind of bearish, right? So at the bottom, red and orange. At the on the top, green, light green and dark green. Then bearish. Simple interpretation. Here, kind of sideways, not very confident. Okay, kind of bullish. UPL, for example. Let's check price action. Okay, there's a big green bar. So that's how you have to look at this data. I hope this has been useful. This interpretation has been useful for you. I would suggest that in live market conditions, form some kind of hypothesis. Okay, like take some bullish scenarios in some stocks or in even in Nifty or Bank Nifty, and try to interpret what is happening on the options OI build up side, and see whether you can sync and see whether that assumption will come true or not, and you build up that confidence and try to how to harmonize those two kinds of systems and be on the right side of the market. So that's all folks, and if you have any doubts you can leave comments below the video. I'll be able to answer those. So you can check this under the open interest charts here, open interest. Okay, thank you, bye.